Good morning, traders. Today is the 24th of January. My name is Devil Hornsey, Market Actually Trading. And today I'll be taking a look at the week ahead. The first thing we'll do is look at the YouTrading.com Forex heat map. We can see the bottom left-hand corner with the commodity pairs is turning red, top right-hand corner with the yen and the Swiss franc is turning more green. So the London session on the Monday is starting off risk off. If we go to the economic calendar, we can see that this morning we've had European, German flash manufacturing PMI and flash services PMI, both of which came out better than expected. Tomorrow, we've got Australian CPI, and they are also on bank holiday. So the Aussie dollar is probably not going to move that much until Wednesday when those traders come back. And then Wednesday is the big focus of the week because we've got Canadian rate statements and we've also got the US Fed FOMC statement. They're unlikely to change their federal funds rate. But they are paving the way for a 25 basis points rate hike in March and also to taper their holdings over the course of the next 6 months. So Wednesday is going to be the big day for volatility. The markets seem to be repricing ahead of that with yields rising with the expectations of rate hikes. And we're also going to look at how equities are doing. Come Thursday, January the 27th, we've got US advanced GDP. That's market moving. So that'll be the focus of that day. And then we bookend the week with core PCE, which is the Fed's preferred inflation metric. All right, if we just look at the active trader platform, talking about rising rates and yields, we actually saw the TLT have a bank holiday on Monday, but then Tuesday sell off, Wednesday, Thursday, Friday, it actually sort of appreciated. So the 20 to 30 year yields actually dropped, even though the shorter term to the sort of benchmark US 10-year yields had actually risen to 1.9%. So we're sort of seeing that flattening off. That is actually quite bearish for the markets. If we look at the dollar index, we can see that it's trading above the $95.50 sort of old support resistance sort of pivot. And we're back above now the 20 and the 50 daily EMAs. So the dollar itself is looking bullish, but it's going to take some doing to get through this block from the 24th of November through to the 11th of January. So this trading range here, you know, it was heavily traded. So to get through that and then back above the $97 is going to take some doing. But as it does that, it's adding pressure to the euro versus US dollar. Now the euro obviously has that good PMI data out this morning. We did have a bit of a bounce off the lows of today, but if you look at the euro versus US dollar, it's in this rising channel. It's capped by the 20 and the 50 daily EMAs, 200 all the way up here, back in this range. But with that rising dollar, I see the euro versus US dollar coming back down, finally breaking and closing below 1.3, heading towards 1.115. So if we see what happened last week, we had a big sell-off in equities, the raising of the rates and yields, obviously affecting the tech and sort of large cap indices. They're now following the small cap indices lower, which had been signaling that for a while. So we've got this market structure here from the 3rd of October being broken today. We've been below the 200 EMA now on the daily time frame for a few days. That's not good, obviously. The bears would be definitely in control now. If we go to the US industrial average, you can see that is also closed below the 200 EMA. We just need to get past this swing low here. So the market structure break here will signal a further decline. If we go to the UK 100, so this is the UK FTSE 100, obviously been grinding higher, never quite making the all-time highs again. And now it's being like pulled down by the US averages. If we go to Brent, crude oil, it's going to cap, well, it will be capped by this rising US dollar, but we have seen Brent and WTI above its previous swing highs. And the Brent contract itself is trading above $86 per barrel. So that's obviously very bullish and good for the Canadian dollar. Dollar CAD is being pushed higher though by this appreciating dollar. If the oil was to now suddenly go a lot higher, we could see the dollar CAD finally touch this old support, now act as resistance, and then maybe we would get that break to the downside, take out double bottom down here and then test this range here. Obviously, if oil was to like depreciate and the dollar was to appreciate, then we could see the dollar CAD get back above this one spot 26, maybe retest it before continuing higher to test up to the 1.3 again. Pound versus US dollar. Obviously, US dollar is appreciating, so we're seeing the pound sell off. I did say that we're going to get some sort of compression whilst the 20 and the 50 were below the 200. Looking to the left, we've got this market structure here, which might act as a bit of support. Otherwise, we're going to come down and test these swing highs here, taking the liquidity below all these sort of bearish candles there. Going through to the dollar versus the yen. Now, the dollar obviously is picking up a bit of positive flow at the moment. Dollar yen itself is looking more bearish. I was hoping that we'd get back above the 20 and the 50 and then stay there. It turns out that the 115, if you like, it was resistance, and now we're coming down to sort of test this low, which means this whole bullish idea might be invalidated now, and we'll probably come down to the 200 and test the swing low around 112.50. So we've got Australian inflation data coming out this week, and it looks like they're repricing at the moment. Aussie to come lower. Commodities are going to be affected by US dollar, obviously. And the 20 and the 50 have once again acted as resistance the last few days. So we could probably come down, test this liquidity. This rising channel is broken to the downside like I expected. And 0.7 would be a good target for the bears. Quick sort of macro underlying sort of theme. The Fed Treasury General Account is actually building as the Fed take in more taxes. So we're seeing flows go into the Treasury account through the taxation. We're also sort of seeing that the 10-day moving average of the fiscal flows has dropped quite dramatically since November. So we're sort of seeing less money get pumped into the actual US economy. And then looking here, I've got the last 3 days. You can see that on the 20th of the January 2022, so that's the last time they reported, that you can see that it's turned red. So we've actually gone into a surplus. So where it used to be a deficit, where there's more money going in than was being taken out, we're now seeing more taxes coming out than the money going in. So for the first time that I've been tracking these sort of metrics, the US government are now running a monthly surplus. So that itself has been a trigger for a sell-off in the past, because like I said, if there's less money going in and more money coming out, then there's less liquidity to support the equity market. And that's being borne out in the price action that we've looked at already today. Okay, Wednesday is going to be the sort of focus. So if you have made a trade between now and then, especially if it's within the US dollar, maybe look to pare back the risk on Wednesday and then come back again on Thursday after the GDP. All right, take care, and I'll speak to you again next week.